Afternoon, ladies and gents. Hope you're all having a great weekend. A little bit later than planned, as I did fall asleep early on Friday. But here's the video on some of the indicators that I use as requested. So we'll jump ahead in with the mobile metaphor instead of the laptop version. Because I do know a lot of you do use the mobile version, and it can be a little bit more confusing as it's a bit more all sort of compact. You are limited in some stuff you can and can't do on the mobile app, but overall it's still a great platform that I do recommend for people at all sort of levels. So let's go ahead and jump in with the indicators. One of the most important indicators I actually use whilst trading gold is in fact the 200 EMA. The 200 EMA has multiple uses. Um, Most being how good it identifies a trend. And once you can identify a trend, um, I remember there's even the saying, the trend is your friend. It can be one of the most sort of, in theory, almost easiest ways to trade, but also one of the most profitable ways to trade because you're not going against sort of momentum and effectively going against the trend. And obviously, it might sound a bit crazy until I sort of show you it in action, but you'll soon see how sort of powerful just something so simple can be. So, whilst using the 200 EMA, like I say, it identifies the trend. So, I'll get my pincers out here so you can see. Oh, in fact, sorry. So, what you want to do if you haven't got the 200 EMA, you want to click your screen, go ahead and click the F, which will be for flash. You'll see a screen like this. You want to click main window because you're wanting to add this indicator to the main window of your chart. So I'll go ahead and do this and pull out of it. So as you can see on the top box here in the trend box, we've got moving average, a couple of text down. So if you go ahead and click moving average, it will load up a screen that looks like this. So these are the inputs that we use for the 200 EMA. First being the period, which is obviously 200. For the shift, we keep this as 0. Shift is if you're moving it, like deviating it left or deviating it right off the current price. But for this, we do actually use a 0 shift. The method or type we currently use is exponential. These different forms of method slash type of moving average. The main being simple, one is smooth, one is linear weighted, and obviously the exponential that we're using now. These are a lot more of different types of moving average, but they are the actual mainstream ones, which are even listed there. But believe me, there's a hell of a lot more actual different types of moving average. But like I say, they're the most important for trading, basically the mainstream ones. Um, but as we say, we use the exponential for this. We're applying it to the close of price. Again, there's a lot more options in there, but for this strategy we're applying it to the close of price, not the high-low close or open, for example. So make sure that's set to close. Levels for this indicator, this isn't really relevant, but for others, you do have to have things like levels. So leave that blank in the level section. Style. I personally do use, I've always used yellow for my 200 EMA, just because it's quite important. You do want to be sort of drawn to it at most times. So you, obviously being yellow, you can quite visibly see it. But by all means, choose any color that you like. Obviously, I'm going to keep mine as yellow. The pixel again, this is quite important. We're going to be adding more moving averages. Some of are less important than others until you've fully got used to that moving average or the others moving average in turn being on your screen. I do recommend at least making this a bigger pixel just so it's easier for your eyes to determine the differences between each. Obviously, the thicker being the most important. So set it to 4 pixels. Well, I recommend setting it to 4 pixels. And this is again quite important here. Make sure you click save in the top corner. Don't click properties on the left side, or else it'll delete what you've just done. And similar on this box here. Just double check one last time that it looks exactly the same. But again, don't click the left arrow. Make sure you click done because it would remove all the work that you've just done setting up this indicator. So go ahead and click done, and then go ahead and click anywhere on the chart. This will have now added your 200 to your chart. So as you can see, let me get my pincers so you can see where I'm looking. So the most important thing, or one of the most important things whilst using the 200 is, while price is firmly below the 200 EMA, you do not look for buying opportunities. So for example, most recent, this is just the last couple of days, sorry, it's the last day, so last Friday. As you can see, price was below the 200 EMA. So you wouldn't have been looking for buying opportunities. Don't get me wrong, there's these buying opportunities squeezed in there, but it's a lot more risky to try attempt to catch a buy while it's clearly on a descending trend, which is indicated with price being underneath the 200 EMA. So I wouldn't be looking for no buying opportunities. And if you look, very little attempts other than little tests of this 200. We didn't really get any buying opportunities anyway. So that's just a brief example of it there. Let's show you in full force and how it works, obviously, on the inverse. So as you can see here, this is a nice example of a nice bullish movement above the 200. So price was firmly above the 200 EMA. We had a quite a dramatic burst up through, which was likely some news of some sort, or some correlated news tied to gold, which obviously give it some explosive movement there. But as you can see, price was firmly above the 200. After the explosive movement, we could have had a quick correction, but we didn't. You can almost see here the high and the low of the range with a little false break there. So price was firmly above the 200 EMA. So while price is firmly above, you're not looking for selling opportunities. Similar to while price is below, you're not looking for buying opportunities. While price is above the 200 EMA, you're not looking for selling opportunities. So as you can see, at very little points, other than again here we've had a slow progressive test, attempt of a test of a 200. Price stayed firmly above the 200, which was firm buying ground, other than a simple test here, which didn't quite make it, but then again broke off and went up. Again, if you can see, before we finally did collapse, look, we had that one nice test there, which did reject, but obviously we'd had such a strong uptrend. We knew we had some weakness to come, some profit taking, so the price had to consolidate or at least drop a small bit, which obviously it did. Indicated when it started to break below the 200. Obviously the trend had switched, so we wouldn't have been then looking for buying opportunities. And again, while it was under it, look, there was not very many buying opportunities. So that's just two examples. Let's break back now and see if we can see some more. In fact, this here now, this is quite important. This in fact is one of the rules when using the 200 EMA. What you can see here is a flat trend. You do not at all try to even attempt to trade the flat trend, because you will come unstuck. I'm trying to get forgot how to even get the horizontal lines up on the iPad. This, as you can see, we quite clearly have a strong, let me get the top, high and low. We've got a strong visible flat trend. You know what I mean? A strong period of consolidation. Wherever you see these strong periods of consolidation, indicated clearly here in between these two red lines, completely avoid trading. There's other styles of trading you can do, catching the lows once you've identified, like I've done here, the low of the consolidation, and obviously the higher the consolidation, it's a lot riskier, but you can trade obviously the lows, buy, and then sell off the things. But again, this is great, a high deal of risk involved when trying to trade the consolidation zone. Don't get me wrong, you can still profit from it, but I would not recommend it, especially for less seasonal traders, because don't get me wrong, you can usually catch one or two, but then eventually you are going to get a dramatic break out of this consolidation zone. So like I say, I would recommend just avoiding. Good to place the horizontal line, identify the low and the high, so you can, you know what I mean, you can sort of clearly see it visible. But like I said, I would recommend completely avoiding trading while you can visibly see a flat consolidation phase. So I'm glad we've seen that. So we've pointed out that. Let's have another scroll back in price. In fact, what we'll do, that was on the 1 minute candles. Got to remember that EMA that we've added works perfectly on all time frames. Obviously, even better on the higher time frames because there's a lot less noise. But you're always going to get the same sort of principle of, as you can see here, look, tests of the 200, and while it's above, don't look for a sell, and while it's below, don't look for a buy. So let's quickly just change over to say 15, another time frame I spend a lot of time on. So a lot less noise on the higher time frames. So let's just have another look for another hunt of a nice example. So here we've almost had a rough consolidation phase, visible sort of here. Get my pincers, alright. So as you can see, it's almost set a high twice, low there, and a low around here. So we was consolidating, but after this consolidation phase, we would have been still looking to get in a buy. Obviously, we had these false break zones, which was that was a severe wick. So again, I'd have been looking to get in around here. Once we'd firmly been above the 200. Obviously, we've made sure that it's not just noise. It's not going to drop back down because you can't just dive straight in with these. Because let's try and find an example where if you're too quick, you know what I mean, you've got to wait to confirm the trend. So, well, in fact, this is a nice example. So look how we'd we're more above here, as you can see here. We're more above the 200, aren't we, than we are below the 200. But we are still having these severe sharp pockets down. We're not we're not skipping up nicely along the 200. We're having some almost zigzag movement. So again, this is a sort of a period. If you ever sort of see this sort of thing happening, this is again where you want to be sort of proceeding with caution, because again the market's showing a lot of indecision. It's unsure on itself, hence the zigzag motion. And at sort of first view, as you can see, price is more above the 200 than it is below. We had an explosive movement up, but then look at that for a collapse. Don't get me wrong, this will have been some news, but again, just look at how it was more leading to be a bullish movement, which again, he could have gained a lot of pips, you know what I mean? It's if you're holding for too long, because you could have rid it up a hell of a lot before it dipped, but the overall, do you know what I mean? If you'd have, it's one of them where if you look away for too long, you look back, you was nicely in profit, and bang, you know what I mean? You've either hit SL or you're balls deep in a loss. So again, you've periods of indecision where it can be skipping up and down are periods of time where you want to be actually avoiding. You know what I mean? I'll now show you some just nice, strong examples of where you want to be taking part in, where we've got progressive movement above and below the 200 EMA. So, oh, this is a nice one here. Look at this. So, we've had a nice flat trend here. So, we're going to just briefly, and this is only roughly, just identify. Oh, no, I don't want that. Shit, I don't know how to delete that. Okay, well, fucking ignore that line. What is a horizontal one? Oh no, right, so that needs to go. No. Yeah, right, so delete that. Right, so we'll quickly just identify, we've obviously got a flat trend here, false break above, and this is only rough, but you can see it. So roughly it's around there. So we clearly identified a flat trend which you want to be avoiding. But the good thing about when you identify a flat trend is you're always going to get an explosive movement, either bullish or bearish out of it. So although I have said flat movements and consolidation phases are periods that we want to be avoiding, there are also a period of time where it's almost giving you indication that you're gonna get a nice movement to come. Because obviously, like I've mentioned, you could be more risky, try to trade the consolidation zones of the highs and the lows. But overall, while price is consolidating, it's consolidating to do a breakout of huge proportions in most cases, and this is one right here. So as you can see, we was consolidating in the in between the high and the low. But then, as you can see, we'd set this false break zone here. So this was our benchmark of where to avoid without trying to be stung effectively, because this is where the market effectively made an attempt to catch people out early on a breakout for a bullish movement which it wasn't even ready for. So roughly that wick there and a couple of pips above is roughly our guideline of where we want to be. If price can be firmly breaking above, we want to be looking to be jumping in on this. So as you can see over here, we had this wick. Price had finally started to give up. We had a nice bullish movement, which was still in line with this area over here. So we was not ready to pull the trigger just yet. We needed more confirmation that this was a full breakout taking place and not just a replication of this false break here. So we would have been again looking to jump in here. As you can see, price had a nice explosive movement up, small consolidation phase, but we didn't break below our initial sort of entry zone or area we were looking to be in. So obviously all above was nice profit taking zone. Well, any area, but if you think we're on the 15-minute candles now, so any small movement anyway is nice profit for gold. But you know what I mean, you're talking a nice bit of profit just on the next few candles alone. But even the overall trend itself, like I say, you don't want to be looking for a sell unless you're trying to catch the test. But let's not get into that again. And look at all the nice profit movement above this zone here, where you could have been taking all the way up here, where it was balls deep in profit. So we finally, obviously, run out of steam and attempted a test of the 200 around here. Didn't quite make it, but it was still in my eyes an attempt of a 200. But again, look, the overall movement stayed firmly above this 200. So again, like I say, while price is above, don't look for selling opportunities. You've identified a false break zone. You could have effectively stayed in this trade for a very, very long time. I'm personally a scalper. I like to be in and out of my profit, unless I'm very confident on a swing. But to me, I like to be nibbling away on an uptrend just because it could reverse at any point, giving me a better opportunity to get in while it's still above the 200. You know what I mean? I could take profit, for example, up here, all the way up here, but then it drops down. I could be back in, riding it all the way back up again instead of missing out on the potential profit on the way up. And when done right, it adds up to more than keeping the one lot running all the way up. You know what I mean? Because you're effectively getting a lot more trades in between, and effectively lowering the risk to some extent. So that's a nice example of a bullish movement above the 200 EMA. Very, very nice example. So let's now try and get a bearish movement below the 200 EMA. Another very nice bullish movement. Look at that, identified above the 200 EMA. Look at this here, we're firmly above, so I'd have been looking to get in around here, you know what I mean? We've not just had a false break. Look at the power movement above. But again, we do want to see a nice bearish movement, right? Oh, this is not too bad. Let's see if we can find a better one. Oh, nice deep. In fact, we'll go to a higher time frame. Be a lot easier to identify then. And we've had quite a lot of bullish movement on we recently. So with the higher time frame, we can go a lot further back quicker. There's a nice one, very nice one here. So this is on the hourly time frame as well. So bear in mind these movements are huge. So as you can see, the yellow is obviously the 200 EMA. look how again, remember, if price is below the 200 EMA, you are not looking for buying opportunities unless you're feeling lucky and trying to play risky, trying to catch a test of a 200 EMA, which again is just very risky in its own right. It's something that I wouldn't recommend, but is still an option. But so back to this, as you can see, we're clearly underneath the 200 EMA, so you would not be looking for a buying opportunity. And look at all this profit that was potentially being made. She wouldn't have been buying. We've obviously see some form of news. Um, it's a shame really, because normally the 200 usually quite taut to this, to the trend, almost like a trend line. It's not quite there, but it's still firmly below the 200 EMA. So you wouldn't be looking for the buys, but what you would be looking at is the pockets off the highs. So that's a pocket off the high there. That's a pocket off the high there to jump in. That's a pocket off the high there. That's a pocket off a high. You know what I mean? You always, you know what I mean? Because this could have been an attempt for a break above the 200 or at least a test. So you're never going on a bullish movement. You're always getting on the pocket off. I mean, so that's a nice pocket off again. Pocket off. Pocket off. You know what I mean? That's another just one of the simple things that you need to be sort of sticking to though as well. I mean, your entries can become more precise with other indicators and stuff that we do add at a later date, and obviously stuff like news and stuff, events. I do recommend the investing app to keep an eye on the calendar, because obviously, as you can see with this huge movement here on gold, that was more than likely a news event. Even look at the time, 1 o'clock, definitely a news event, or half one-ish. So you know, I mean, you don't want to get caught short. You're ready to say getting in a buy around here, and they had some high impact news, obviously, what's caused such a dramatic movement. So you've got to stay sort of ahead of time with recent sort of political events with the calendar, which will dramatically help your profitability whilst trading. Because again, you do not want to get caught short, not looking at the news. So we've identified now a few, well, pretty much all gold's movements based on what it's doing off or under, above or under the 200 EMA, and just scrolling back on price, you'll have a shock how powerful. You know what I mean? From all I've just scrolled there, it's either above, skipping above, or skipping below. So you've clearly identified either buying or selling zones, which just scroll and you can see how powerful in their own right are. But again, this is where greed and stuff, you don't want to let greed, should I say, and other emotions start to get involved in your trading. You want to be sticking to set rules with this strategy, which first of all being completely avoid flat trends. Don't try to trade the flat trend if you're just sticking on the 200, sticking on the 200 trading model. Obviously use the flat trends to identify where you're going to be able to potentially get a breakout from, because like I say, the flat and consolidation phases are really a period of time where the chart is basically screaming at you saying get ready, get ready, get ready, because something big's going to happen. And 9 out of 10 of the time, after a period of consolidation, you are going to get an explosive movement out of the period of consolidation, which is a perfect and almost religious religiously paired trade in its own right, because it's the banks and sort of the industries that are pushing the price out of these consolidation zones, and it's these exact areas that we want to be involved in, not against the banks and against the governments. We want to be in these big movements that the banks are doing, going with the money, not against the money. So that just is a brief example and sort of rundown on the 200 EMA and sort of the rules and things that you want to be doing. Like I say, it works on all time frames, it works on all currencies, but to me it works especially well on gold. So have a play around with that and see what you think. If you've got any comments, give us a shout. But I do, sorry, I will be shocked if you don't find, like I say, that useful.